There are only 10,000 homes available in all of Greater Vancouver right now. Hello, welcome back to the Vancouver Life Real Estate Podcast and, of course, our YouTube channel. Today, we are talking about how incredibly tight inventory is. And while this is happening locally, it's also happening nationally. So like our headline just touched on, there's only about 10,000 active listings in GVRD right now. For reference, that is basically exactly how many homes there were for sale in the month of July 2005, 16 years ago. And of course, what's the big difference between now and then? An additional 500,000 people now live in the GVRD. We have 2.6 population in GVRD compared to 2.1 16 years ago. And yet all those new people living here are fighting for the same amount of active listings.
My goodness. We all want to know why real estate is, or when is real estate going to pop? Well, as long as the population continues to grow the way it is, it's not going anywhere. I mean, that's kind of the whole story in the last 16 years. I mean,
yeah, it is.
All the new inventory, I mean, it just gets snapped up immediately. And if honestly, like the quality of some of the stuff that when we talk about this often, I sound like a broken record, but the quality of the listings that are on the market right now, they're just not enticing enough for a lot of these buyers, right? And here we are 16 years on from when we had very, very similar inventory levels, but with way more people living here. So no wonder the cost has gone up, and no wonder it's become very difficult to find good homes.
Yeah, inventory is just, it speaks so much to what's going to happen with prices moving forward. There's lots of reasons, but this one is one of the most influential factors, is that there is simply not enough homes for the demand that exists.
Well, and then you got to consider too, one more thing. You got to consider the population or new immigrants that Canada is bringing in, right? 400,000 per year for the next 3 years. So 1.2 million more people are coming. The vast majority of which are going to end up in Toronto, Montreal, and Vancouver. So I don't know if this gets better.
Yeah, it's not trending that way. I mean, building permits we'll touch on, and new housing starts are all trending upwards and not a great rate. But again, they're just trying to catch up to the existing demand, and forward-looking demand is looking tremendous as well. Quick touch here on inventory. Single family home, 10-year low, no surprise. That 16-year sort of equal inventory that we just touched on, that was for all property types. But yeah, not surprising, single family homes at a 10-year low. New listings at a 10-year low, which is also going to be part of the inventory issue here. But a fun thing to kind of note, the exact same data is happening in Toronto. They also are 10-year lows for both those metrics. So we're seeing very similar housing habits at either end, at either of the two major cities in our country here.
Yeah. And I mean, for context, so to kind of understand what a 10-year low is, right? So if we go back within the last 10 years, when we look at the highest year, that was 2015, when we had the height of new listings, where nationally speaking, we have it about 250,000 new listings, or active listings, I should say, on the market. Fast forward to today, we're at 120,000 on average across the country. And, that also, when you have less supply, you're going to have less volume of sales. It's just, we can't keep up to the volume of sales with no inventory, right? So yes, we're coming off of some crazy numbers in March, and I think that's got to sustain. So the prices have to come down a little bit, but they're not going to come back too far. I mean, and this is why, because the fundamentals here, we just don't have the supply, right? Yeah,
that's less than half the amount of homes from 6 years ago nationally. And yet think, what's the population increase since then? 1.5 million more people are in the country since 2015. And yet they have half as many homes to try to buy. Yeah,
that's true. And then, we're going to kind of touch on something here where actually that supply is going to really continue to dwindle, because a lot of people that would have otherwise maybe had sold a property to get into another one, more and more people now are trying to hold on to that property and keep it as a rental or as an investment, because over the last 44 years of owning real estate, we've been tracking, it really hasn't gone down, right? So supply is also being further tightened by people who still live here. And that's another piece of this pie that really isn't being spoken about.
Yeah, we talk a lot about how the supply is being repressed and how the demand is growing, and that's a big reason as to why housing prices are where they are. But yeah, Ryan touched on an important factor here, is that if you have owned or watched a house or the housing market rather over any amount of time, but let's go macro here and look at 15, 20, 40 years, essentially, the chart has just gone up, right? So why would you not look at housing as being secure asset? You've seen in an average of 9% appreciation over the last 20 years here. It's like the stock market, right? NASDAQ all-time high this week. Dow Jones all-time high this week, right? It's like everything about those markets and the Vancouver market says, look, as long as you just hold your property, it's going to go up in value. Now, yes, of course, we can't tell the future, but you can't change the 50 years of data that we have. So as a homeowner, you're like, great, well, as long as I just hold this thing, it's going to keep going up in price over time. And of course, what we're seeing now is a lot of people are moving into that second house based and being able to keep their existing one and turn that into a rental. So people are holding on to their real estate more than they ever have before, because again, A, it's making the money, and two, it's hard to find potentially another property out there that they like as much. So there's all sorts of reasons, but again, this one that we've kind of wanted to touch on this week is an important one. People are holding on to real estate more than they were 20 years ago.
And to speak to that, we actually met with somebody in one of Vancouver's most expensive neighborhoods, Point Grey. And just a story, as we were doing some investigating and looking at the property, this couple had purchased the home back in 1993 for $403,000. It sits on a 10,000 square foot lot, it's a 30,000 square foot home in and about. That very same home has been tax assessed at $7 million now, which is a 17 times return on your money, or 1,700%. Right, on a 28-year investment. So, when you have data like that, now that's an extreme case, right? But when you have data like that, and over that duration of time, and you've seen that level of growth, it equates to roughly $250,000 a year to live in your house of passive income, right? That's an outrageous number. But there's actually a lot of cases that show these levels of performance. So this is what people know, right? So why would they be giving up these investments? I think the inventory issue is a bit bigger than just trying to catch up, right?
Yeah, exactly. So having family members that are telling you that story, and you look at it and you're like, wow, just by living in your home, your wealth increases by almost $250,000 a year. It's you can understand why these homes become generational, and why the owners are able to help their kids buy their first home by tapping into this equity, and of course why they believe in the power of real estate here. Everyone on that street likely saw similar returns in that neighborhood too. So how can you not believe in it?
Yeah, on that street back in 1993 or whatever, there were 4 houses, right? Now there's probably 14. So
that's fair. So obviously demand is there. Building permits actually increased nationally by 9% last month, a massive jump, and is currently at an all-time high. There have never been more building permits out in Canada as there is today. It's about 290,000 nationally. Wow. So, people are trying, builders are trying, and the permits look to be given out at all-time rates here. So again, there's a lot of catch up to do here to make housing even remotely affordable for the average earner. But at the end of the day, there is supply starting to inch up.
Yeah,
from new construction side, of course.
There is. That would equate to a bit of a construction boom as well, right? Generally speaking. And it's good for the economy. It's good to put those jobs, into the economy and so on and so forth. But again, I think as long as our immigration numbers are at 400,000. I mean, that's just for this year. We have 290,000 nationally that we've started. I just playing catch up the whole time.
Mhm. So understandably, as things have opened up here, as people are starting to work back downtown, and as housing becomes even more affordable, the look towards rental has greatly increased. Maybe it's, that flock to the suburbs is now flocking backwards or back down into the more urban areas, where we have now seen a 7% increase in rents just last month for these downtown cores.
Wow.
So rents obviously, plummeted about, 20, 30% at the height of the pandemic, and they're inching back. And again, at the rate of just 7% last month alone.
Well, that speaks to the economy opening up and the border, getting people back into the country. Definitely, I know we have a lot of people anecdotally who kind of sold out of some apartments to go back to school. They moved closer to the major schools, right? So again, pushing rent numbers up as inventory continues to slide.
Yeah, that's it. As Ryan and I both invest in Alberta, we keep an eye on the market there. So to share a bit of data for anybody else who looks to our province to the east, Calgary and Edmonton, they're seeing quite the rush, quite the land rush right now, which is probably the first time they've seen it in about 8-9 years, where sales are up 14% year over year. It's been a long time since we've been able to say that for that province.
Yeah, no kidding.
And of course, that is resulting in price increases, where Calgary has seen an average home increase about 10% year over year, and Edmonton is up around 7%.
On the recovery.
Bit of recovery there. Yeah, it has been a long cycle that they have sat at the bottom of that cycle for.
Yeah, agreed. And just to touch on a little bit here, the early August sales data showing basically the GVRD have prices have flatlined at this point, and I've expected. I guess we'll see where September goes from here.
Yeah, it's we got 10, 11 days of data here, and the prices are looking flat. Which if you watched our last episode, that is a change from the last 3 months where they were dropping at about $20,000 per month. I think this is largely due, well, we know why it's due, obviously, because of the market's so tight right now. But I wanted to also reference that sales to active listings ratio that had dropped quite steadily for 3 months. And do you remember, Ryan, it just flatlined last month as well?
Yeah, 33%. Yeah.
That shows how indicative that indicator is to pricing.
So it's my favorite one.
Yeah. So we saw sales to active listings ratio flatline last month, and now we're seeing prices follow suit. So interesting stuff.
Teeing up for an interesting September.
It really does. Cool. Well, I think that is it for us today. Thanks as always for watching. If you're enjoying these, please do subscribe and hit that bell so you get notified of our weekly updates. They do happen every Saturday morning at 6 a.m. I think that's it.
See you guys next week.
Bye.